Hello and welcome to Switzer Investing TV. I'm Peter Switzer. Thanks for joining us. On tonight's program, I have Jun Beil Liu of Tribeca Alpha Plus, and I've asked her to concentrate and talk deeply about three stocks that many people ask me about. I think they're three companies that are dominant in their particular industry. They've been on the outer with the market in recent times, but they are quality companies. And I want to know whether she actually has a good story to justify buying these stocks right now. Those three stocks are CSL, IDP Education, and finally A2Milk. Very interesting discussion I expect to have with Jun Beil Liu on those particular stocks. And then I'm going to look at dog stocks. Stocks that you might call dogs. You've held them for a long time. The share price has not helped you and you think, maybe it's time to get rid of these. But I pose the question, what if the big picture that worked against those stocks is now changing? And I look at a number of stocks like Zip, we've seen that share price bounce back recently. We've seen Tyro, its share price bounce back as well. And they could be, and other companies as well, these could be companies that are beneficiary of changing circumstances. I look at that in more detail after my interview of Jun Beil Liu. So let's kick off now with Jun Beil Liu of Tribeca Alpha Plus. Thanks for joining us, Jun Beil Liu.
Thank you for having me as always, Peter.
I asked you today to talk about three stocks that a lot of people ask me about. But before we do that, the market's had a pretty rough day at the office. And what's interesting, some of the big names are down, CBA, CSL, BHP. What do you think's behind this?
Look, behind this was a little bit of concern over the job report, and that was a little bit mixed, not as good as expected. So I think caused a bit of worry whether there's rate cut earlier or later. So I think that.
What do you think the big conclusion?
I actually think I think the market is a little bit confused. I actually think the conclusion should be the wage growth is down, which is what you want to see.
For
you
inflation.
Want the inflation. That's right. So that's the key number to look at, and I think market is a little bit misread that. And secondly, I think also because China, out of the National Party Congress, that's hasn't come through with any major sort of stimulus announcement, so that's somewhat disappointing to the market.
Is that why BHP suffered?
Yeah, that's right. So BHP and all the larger miners sort of went down. But look, to be frank, I think they've got enough stimulus support in the place at the moment. We really shouldn't be expecting major sort of targeted stimulus.
There is a consensus view that China's not doing enough, it's growing too slowly, but you're not with the consensus. Do you think China's going to do a lot better than what the mainstream guess is on China?
Yeah, look, I think China is doing okay. So yes, they got a growth target of 5%. Maybe market is very skeptical whether they get there or not. But remember, they don't have much of inflation. So 5% is real growth. Even if they get to 4.5%, that's real growth. Look, Australia, our real growth, take out the inflation, is somewhere between 2 and 2.5%. So, China is actually growing pretty fast. So, they're just working through some of the confidence issues with consumer, as well as their property sector has taken such a big hit. But this certainly seems like, based on the share market performance back in China, it does look like the confidence is returning slowly, but it is returning. And green shoots everywhere. You're seeing the Chinese consumer traveling, stats have been very, very strong during the Chinese New Year.
Well, and we will get to A2Milk in a minute, but I looked at this chart recently, and after that big 15 or 16% on reporting, it's continued to go up, and I took that to be a sign that some people believe China's on the way back. But we'll get back to that in a minute. I want to cover something else related to what's going on now. So your view then is that what we're seeing now is like an overdue pullback, and that people should not be worried that this is going to turn around and be a big negative sell-off.
That's right. So I think with the share market, if you look at the fundamental it is now, it's actually pretty good. Economies are maneuvering through slowdown, and that's all within the expected. And all the reporting season, company have reported better than expected results because they manage their costs better. And then at the same time, we know the interest rate at some point is coming down rather than going up compared to last year. So with all that clarity, we certainly think next 12 months, our economy is okay and our corporate earnings is fine. So really, in the current share market, it's really a market for you to buy the dip, rather than sell the rally, because the fundamental is strong. I know at the moment the big rally in the US is just the tech companies. Now that sector valuation is a little bit harder because the thematic, the AI and things. I still think you should have exposure to a couple of those stocks, but I think there's broader market. The valuation support is there, and it should be bought on every dip.
Yeah, and also helping someone believe that story is the fact that sometime this year, both in the US and here, they'll start cutting interest rates, and that's always a good stimulus to the stock market.
Absolutely. It supports the valuation. So, this is opposite to what we experienced last 12 months, where the interest rate was going higher, and that was very hard for the share market to really price that in. So now it's going lower. It's better. It's better for corporate earnings as well, because interest rates going down. Particularly at the time, corporates actually managing their costs really well. So potentially you have earnings upside moving into 2025.
Yeah. And are you of the feeling that the Australian economy is probably slowing down faster than what the Reserve Bank was thinking maybe at the beginning of the year, and therefore maybe the first cut is closer than what the economists were predicting earlier in the year?
Yeah, sure. So that's right. So the economy is slowing down quite fast, but Reserve Bank sort of hinted towards the latter part of this year. And the economists sort of looking at that way at the moment as well. Things are slowing down, but we just need another few prints in terms of the inflation and confidence. The consumer confidence very weak. Just to see how that may play out in the next couple of months. Then we'll know when the rate cut is coming.
Yeah, because I think the March CPI doesn't come out until late May or something like that, or even early June, which means the first chance to cut would be July. And I think if the economy is slowing down faster than what we all expect, they'll probably move in July.
Possibly, yeah. So we need the US to move first, though. And then, unfortunately, it's always been the case. So the US at the moment, economists predicting 75% chance of a cut in June. And we'll still see how the inflation goes.
But you're young enough to remember this, but during the GFC, in fact, Australia was the first to cut.
Yeah, that's right. So we do need to see that taking place.
Yeah, I was actually in the Qantas Club in Townsville after doing a speech when I was calling the RBA a bunch of morons for not cutting interest rates, and on that morning they actually cut it. Yeah, it will
be really nice to see if we can lead the pack this time around, given what has experienced. But I do think the new governor, it's her first cut, that she will be very cautious.
Yeah, and I do think that the America has a greater reason to cut early because its inflation is lower. And I guess the CPI number coming out this week is going to be an important one to look at. Now let's talk stocks. This is a company that all the analysts seem to like, but it's heavily shorted. And you and I talk all the time. I think this is a stock that you like, IDP Education. What's your view on IDP Education?
Look, I do like IDP, and what they have shown is that they have done incredibly well in a very, very tough market.
Why is it a tough market?
A tough market because two things. One is they do English testing for people to get visa to go to a different country. Two is that they do the student placement for students from Asia to different country. Now in the universities.
So universities are their big customer.
Yeah, that's right. So now the challenge is the English testing. They used to have monopoly positions in big markets like Australia and Canada. Now Australian market has now been changed many years ago into you can do many different tests. Whereas the Canadian Canadian market has recently just been changed into not just monopoly position. So people are a bit worried about, how much is it going to impact the earnings and margins? It's going to be take a long time to shift that, but that's something just cloud the stock a little bit, took a little bit of premium out, but not to worry. People like this company for student placement. Now the challenge with
it's kind of like the CBA bank player in this market.
That's right.
Everyone else is going to be small compared to it.
Exactly. Right. And then now with the student placement, the challenge is that because student placement business is doing so well, that every country now worry about too many students coming into the country. So Canada has already imposed issues, and UK's changed visa, and Australia is talking about how we can change the visa. So that is putting a bit of cloud on how they can still grow. But the thing is, at the moment, visa very much targeted towards the low quality students who's coming here, but not really for purpose of studying, but they're here trying to find a job and stay here. And that's not really IDP's market, and they have shown in their latest result. So, for me, for the next 6 months, things will be a little bit harder because people just don't know how that might land. But I think over the long term, this is a company that's very high quality.
One of my favourite investment strategies is to pick really good quality companies that the market is picking on temporarily.
Absolutely.
But ultimately, the market will change and the quality of that company will be recognised.
Absolutely.
And the example I often use in this program is when CBA went to $58 around COVID. That was the greatest time to buy CBA in recent times. So does IDP sort of fit that bill? Best of breed in its market. This market is not going away. Few challenges, but has the market smacked the share price down sufficiently that this is a good entry point, even if you don't bounce back to where it was. If you're not a holder of IDP or IEL as the ticker code, is this a good time to get in and nibble into something you've never held before?
Absolutely, but nibble in is the way to go rather than get set. Next 12 months, it's just all the announcement because share price seems to go lower every time when there's a new announcement coming from different markets. But it doesn't. Whether real impact on earnings we will see in 12 months, and this company has demonstrated its ability to grow its share during the tough market condition. So I think absolutely.
Is it also a growth/tech company that, like all tech companies, suffered the rising interest rate scenario over the last 2 years? So as that interest rates come down, there'll be another tailwind for this company.
Absolutely. There's a lot of tailwind. It's a very high quality company, very good cash. For students to book, they use their service and go to different country, they get cash first. So their balance sheet is incredibly strong. So for a business like that, it's actually quite hard to replicate. Market just very short term at the moment. And I think if you can look past it, there's great opportunity.
Yeah. A mate of mine recently sold a college and has been in the industry for a long time. And he keeps telling me, IDP is a very good business.
Absolutely.
And if he knows the industry so well, if he thought there were real shortcomings or flaws in this business, he'd identify them. But he says, no, it's a good company. All right, so you're on the money there.
That's right.
Now CSL, you and I both like it, but it's still copying it. Why is it copying it?
Look, I think it's also works to its detriment when it's one of the biggest company here in Australia. When it's so large, a lot of investors or smaller cap investors tend to look past, whatever the current issue might be, and because they can take a slightly longer term view. That's how you buy small cap. You got to be earlier than everyone else. Whereas CSL is such a big company, you can buy any time. So there's less urgency of getting in and buy this company. Look, I think things a little bit slow in terms of recovery out of the COVID to collect blood where they used to fractionate into blood plasma. But that's recovering quite quickly. And now you're looking at double-digit growth over the next few years just to catch up on all those volume. You've got margin growth to come through. That's very good. And then with the business they bought 2 years ago, the major acquisition, that's kind of little bit slow before
that's
that they
kidney
bought. That's right.
Treatment.
Yeah, more in the biotech space. But remember, CSL wants to grow with its portfolio. It needs to add those molecules and products to its portfolio. So it's important for the long run growth. But at the moment, that acquisition is a little bit slow in terms of earnings. So, but everything else, things are going well. And for the full year, for the next 3 years, you're looking at double-digit growth. That's without even assuming, one of the therapy will be shooting the lights out or anything. So it's very defensive. It's not linked to any economic cycle.
Yeah.
It's defensive.
But you haven't mentioned these magic diet drugs that could be threatening CSL.
That's
Now,
right.
but obviously you've thought about the
weight loss
potential.
drug.
Yeah,
That's right, yeah.
So could these Ozempic, and apparently there's a new one that's even better than Ozempic, is this
so
going
many
to
coming.
undermine CSL's kidney business, for example?
No, look, it's a very, very small exposure. So to CSL, it's about less than 6% of the earning is potentially exposed to the threat of it. So it's not to say it would disappear, it's just potentially exposed to the threat of it. So
Less sick people.
That's right. And I don't think that's, it's just too marginal for CSL. And that's safe, you can say, I don't have to worry about it. But for others like ResMed, potentially market can be challenged. We don't know. We know market will shrink or market, not as bad as what market was saying, but the market will be challenged.
But ResMed is in the sleep apnea.
That's right.
Now, I've never slept with a man, but a lot of women that I know who have always complain that men snore. Whether the fatter guys probably snore even more, but thin guys snore as well, and they have sleep apnea. So it just seems to me everyone's sort of saying, "Oh, no more fat guys."
Yeah.
Therefore, ResMed's dead. I can't see that.
Oh, look, I can't see that. And then also they're saying, look, what ResMed has demonstrated is that potentially this drug is actually grow the market, because a lot of people don't know they have sleep apnea.
Yeah.
And then you go and test it, you go, oh, actually, I needed some sort of support. And that sort of drug only applied to certain patients. So you potentially can grow the market for ResMed.
Okay.
But there's a bit of uncertainty. That's why it's being impacted.
Yeah, but uncertainty creates opportunity, provided that the uncertainty is wrong.
That's right.
and I guess
Provided you just open your mind into all the new data that's coming into the thing. For ResMed, in the next few weeks, end of this month, we will have a data point for Eli Lilly is doing a trial on those weight loss drug impact on sleep apnea, like specifically.
Okay.
So a lot of people saying, look, if you're going to buy ResMed, just avoid that period. Just wait till the result comes out, and then because these things will take decades to have impact, right, on the actual earning. So it's really the buying opportunity, and that's your buying opportunity coming.
So if you didn't hold ResMed, and you do hold ResMed, don't you?
I hold ResMed.
Yeah, but you were bought at a much lower price.
Yeah, absolutely. Yeah.
But you're not a seller of ResMed, and you're kind of keeping your fingers crossed that your view is right. Well,
you will buy on the dip, and then this result comes through. You might have buying opportunity end of this month.
Okay. Would you be buying it even if the results say yes, it will reduce the need for sleep apnea treatment?
Yeah, because ultimately the impact will take decades to come through.
So the reaction will be the sell off.
Yeah, it just looks bad.
Okay.
Yeah.
Okay, so buy the dip on ResMed as well.
Right.
Buy the dip on IEL. Buy the dip on CSL. But now what about A2Milk? Now you've been a great believer in A2Milk, and you got a nice result a couple of weeks ago. Did you ring up a whole lot of people and go, nah, I was right?
That's right.
No, you didn't do it?
No, I didn't do it. I'm going to be kind. Look,
were there some people saying to you you're wrong on A2Milk?
All the whole time. And the market always does that. Yeah, and and then sometimes it's very hard because the market is tough. And the market is tough. And the Chinese infant formula market was really, really tough. But A2, what they demonstrated in that result was fantastic. Share gain, and also what's interesting in the news today was the Chinese comparable, the biggest Chinese Feitun, the biggest Chinese infant formula provider, 20% of the market share. They just had a massive profit warning, and their profit warning is saying that their market, they were down something like 15% their revenue for the December half. Now A2 was flat. And the market was down similar in that 20%. So that means A2 has done incredibly well. And they talk to, the A2 managed to hold their price quite well, whereas the other guys talk about discounting and things. So to me, it's really gaining a lot of share. And it's getting recognized. It doesn't really have to compete in that whole discounted space.
Yeah. Is it regarded as high premium? Okay. What's its market share like?
So the market share is all into the 20%.
So it's as big as the...
Oh, no. Not as big as the largest one, 20% of the international market.
Yeah.
So they split into the local brand and then the international brand. So they're up to quite a large 20%.
So it's the biggest player of international brands. And are the international brands the ones that dominate the premium market?
That's right.
Yeah.
They're the premium market.
So the local Chinese brand caters to a poorer audience.
That's right. That's right. And then they're more in the lower tier city as well.
Okay. So this is do we call A2 then effectively like the Commonwealth Bank of the foreign brands?
That's right, I like that.
So it's the best of breed.
Best of breed. And wait till you see the market condition turns, and it is turning because apparently there's a lot of marriage sort of registrations. We're into the dragon year, as we talked about, dragon year. There's a lot of babies.
Everyone will have their baby born in dragon.
That's right, they timed it really well. So, early indication, and even the spot at the maternity ward already being filling up very quickly. So I think this is going to be...
So babies 1 year, it's baby milk the next
that's
year.
Right, And in the next 3 years, you've got them for 3 years.
At least 3 years.
Yeah, that's right.
No, but also there was, I remember when Blackmores got into powdered milk, it was when A2 was shooting the lights out. And they were trying to get older Chinese people to drink this formula milk as well. Has that been a trend that actually has grown over the years, or has it sort of gone nowhere?
No, it actually has been growing, and then for Chinese population, because of the use of Chinese medicine, they're actually quite perceptive to using vitamins and the milk drink.
Yeah,
generally,
organic stuff.
That's right. Yeah, so they actually love this. So A2 actually has thinking about got this product that potentially targeting at that market, and that market is enormous because that is your your traditional the Chinese medicine market where none of these foreign guys hasn't been able to crack it. So I think that has a great opportunity.
Okay, so you're still on the A2Milk.
I'm on the A2Milk, absolutely.
And I've got to say, I looked at the chart for a story I wrote over the weekend. You had the big rise, and often after a big rise, you see a bit of pullback. This has kept going up. So more and more people are believing the Jun Beil Liu A2Milk story.
Yeah, that's right. I think it will keep going up because, I think the market is turning for this company. It's at the very bottom, so we're at the tipping point of that turn.
Okay. Now, they're the three I asked you to talk about. Is there anything new that's come onto your radar screen over the past 14 days?
Yeah, look, last 14 days, I think it's, what's interesting is the lithium name we often talk about, right? So it's, they caught a bit and now experience a little bit more pullback. But I actually think this looks really interesting now, this space. Previously we're just talking about the improving condition. Now we're seeing that all this capacity being pulling out, over...
Smaller mines closing, you say?
Yeah, that's right. But something like 15% of the capacity being pulling out now has been announced to be pulled out.
Is that because they just can't afford to keep operating?
It's not economical. And once you pull that out, you stop that, it's very hard to restart and it costs money to restart again. And that is essentially there was too much supply at the time. And then the demand is looking like it's starting to improve. So, that dynamic, supply and demand dynamic can change really, really quickly. We're seeing the lithium prices started moving as well. Not just the share price moving, it's the actual lithium prices moving. So I think that sector looks very interesting. This is on top of all the M&A we've seen previously. All the billionaire wants to have a stake in it. Institutional investor wants to hold a stake in it. So I think it's a very limited sector where you can actually have many companies.
Okay, so is Pilbara still the one you like?
Pilbara's right, yeah.
Okay. Is there a second one if you were forced to go into a second one?
Yeah, look, the second one, your mineral resources is pretty good. It's a little bit more defensive because part of the earning come from iron ore, and that's doing really well. Yeah. So I think net you're probably paying a bit less for your lithium exposure.
But also, if your China story was where we started, is right. That's going to be good for iron ore and lithium, isn't it?
That's right. Iron ore, lithium, copper. Your aluminium. A lot of those commodity will start to fly. Okay.
Well, one last one then. Let's go to copper. If we get a Chinese economic recovery and we get a global recovery on lower interest rates in 2025, is that a good thing for copper? And if so, How would you play copper?
Look, unfortunately, I think copper is very well positioned. The copper price hasn't started moving yet,
No.
but copper share prices have moving so much higher.
Yeah.
Because, Sandfire is probably the only one you can play. There's a smaller
Because
play.
BSP's got a bit of copper, hasn't
That's
it?
right, but it's not pure play. So in Australia, Sandfire, and you're looking at the share price, it is expensive, but it's the only pure play in the larger liquid names.
Can it go much higher?
I think it will, because it's scarcity of value. The thing with copper is that even the copper price hasn't rallied, it's every indication it's going to rally very quickly. And two is that supply. Again, supply is being taken out. Again, not enough supply to come through with the demand is now improving over time. So I think that commodity looks really good.
Okay. It sounds like brilliant analysis. And if you're right, it will be remembered as brilliant analysis. Jun Beil Liu, thanks for joining us.
Thank you for having me.
It's Jun Beil Liu from Tribeca Alpha Plus. And that's Jun Beil Liu of Tribeca Alpha Plus. But if you want to see the whole show, including my analysis of dog stocks that I think will have their day in the future as the circumstances of investing change, you're going to have to be a member, a subscriber to the Switzer Report. So please go to switzerreport.com.au to get the rest of the show, get the Thursday webinar called Boom, Doom, Zoom. You get 3 notes that I put out along with a whole bunch of experts over the course of the week, which gives you lots of tips on where you can invest to make some money in the future. So don't forget, switzerreport.com.au.